Hello traders, Greg here with a market update. Okay, so we've had a slow start to the week for markets. Beginning of the week, markets started trading risk on, and that was on the back of the fact that we got lots and lots of positive headlines on the weekend with respect to the fact that Iran and the US were super close, days away from signing an agreement to end the war. It is now Wednesday, though, however, and no agreement has actually been signed. The market doesn't really know whether or not, how close we are for that actually eventuating. So, market is now getting a little bit touch nervous. We've been to this rodeo before where we've got lots of good news, and then it ended up not being good news. So look, the jury is still out. Market is still waiting for confirmation. Not only that, is that in the last 24 hours as well, we've seen a resumption in fighting between Israel and Lebanon, and Israeli forces are on the ground in southern Lebanon. So not exactly the best look when you're trying to sign an agreement to end the war, especially when Iran has basically said that it needs to end on all fronts, and that's including what's happening with Hezbollah and Israel in Lebanon. So look, there's a few things going on at the moment, and lots of confusion about exactly where we're at with this agreement. So yes, the markets aren't really carrying on with the initial risk on the bid that we saw to start the week. So let's talk about the markets that matter. Market that matters the most is crude. Crude oil. Yes, we did see that on Monday, down almost about 7% at one stage, briefly went below $90. But as just discussed, we haven't got any extra confirmation about this deal being made. So crude oil is floating back up. And so we've got crude back at around about just below $94. So it's rallied a good $4 from its low. The close on Friday was around about $97. So literally, crude oil is only really $3 from Friday's close on the back of those positive headlines about a deal. So we are still at very elevated levels. And I'd suggest if there was some breakdown in this deal, you're going to see crude oil fly topside in a big way. Look, that is a risk that obviously the market, it can't ignore, and that's obviously why crude oil is floating back up a little bit as we speak. But anyway, that initial stress relief we got from crude, we're not getting that as much anymore. If we look at US equity markets, S&P and NASDAQ, they were closed on Monday when we had that initial market risk on trading for Memorial Day. So cash markets opened last night. And US and NASDAQ, US equities did exactly what they normally do, and that is go up. And yes, they have been ignoring pretty much everything that's going on. There's a massive AI mania going on, especially in all the chip names. And NASDAQ was up a whopping almost 2%, 1.7, NASDAQ less than 1%, but both closed at new record highs, and we've got NASDAQ at 30,000. So there you go. We've talked about this before, but it's not a market that you want to try to fade, go against, because it has been a raging bull market. Who knows when this ends? But certainly, again, suggest it hasn't paid to try to be a contrarian or go against this aggressive trend. If we look at the currency market really has done nothing. Really didn't do a lot on those Monday bullish headlines. Saw a bit of US dollar selling, no follow through. Really, it's just it's been trading sideways. So I think the currency market really is waiting for some more real confirmation. So really need a confirmation that this deal's signed, and then potentially we'll see some US dollar selling, and also The fact that crude's going back up higher really hasn't broken down, has really stopped the currency traders from really aggressively trying to chase US dollar shorts. And as far as precious metals, gold, yes, it had a decent rally on Monday. We almost rallied $100. But we're back to pretty much where we closed on Friday and where we opened the week, back at 4,500. So just like the currency market, none of the bullish moves have continued for crude, and again, waiting for confirmation. Okay, so the key takeaway is that yes, market's a touch nervous, really needs confirmation that what we've been told, that this deal was just days away from being signed. Domestically here in Australia, it's an important day because we do have inflation numbers. That's the April monthly numbers. Last month, inflation headline number, that jumped up year on year up to 4.6%. That is one of the reasons that we did get the RBA hike for the third time up to 4.35% for the cash rate now. So this number is going to be very closely watched. Market's expecting maybe that it could come in a touch lower than the big spike, 4.6, maybe down 4.5, 4.4%. Obviously still very, very elevated. But look, these numbers do tend to surprise, so it wouldn't surprise me if we did stay at 4.6 or even maybe potentially push marginally higher. Let's see, but certainly since we've had the last rate hike, we've had some pretty poor employment numbers where unemployment went up from 4.3 to 4.5%. So now RBA is in a very tight spot. They do not want to see those inflation numbers go up again. In any case, no doubt, potentially we might see some volatility for the Aussie dollar and the ASX today on the back of those numbers. In any case, good luck with your trades, and we'll check back in with you shortly.